All right, welcome out to tonight's advisory report. It is June 4th, 2026. We are still in a favorable market, bullish on the intermediate trend, bullish on the short-term trend, and still playing offense in our portfolios. Market opened down today, but rallied all day long into positive territory, and that's how bull markets work. Opening low, closing high. That's a lot of strength right there. We'll see how it plays out the next couple days. We are not predicting, but expecting some more pullback. We'll see how it plays out. Price leads our decisions, so we will continue to play offense and defense based off of our rules. All right, looking at the intermediate trend, let's kind of zoom in a little bit. We go through this every single day. We're talking about being bullish when the market is above the S&P 500 is what I'm referring to as the market above the 30-week moving average, which is this orange line. You can see back here, coming out of the lows of COVID, we had a very strong run playing offense, and then we went into a bear market. Clearly red below the 30-week moving average. That was an area to be defensive in. And then eventually things change and go back to offensive, which price above the 30-week. You can see it captures the trend typically very well. And here we are at this point in time, coming in bullish after a brief 10% pullback for the Iranian strike. The S&P 500 is now 6.22% above the 50-day moving average, which we have on our shorter-term trend. The 50-day moving average is this red line. So we are looking at key levels of supply and demand, resistance and support. And we're looking at a couple moving averages like the 20-day moving average, the 50-day moving average in this case. And so we're looking at a previous high back on May 14th to see how price reacts around it. And today it came down to that level, as you can see, came down to that level and then just was bought all day back up. So a very bullish type of response right there for the S&P 500. The next level we're going to look at is that 20-day moving average to kind of see how things respond, and then the 50-day. So also a couple other areas, a previous low at this point, and then this previous high at this area right here. So we'll see what happens. We have our critical sort of levels in mind to see what we're doing. But as long as price remains above the 20-day, we'll see the 20-day keep up. My expectation would be them to converge. Although that was my expectation right here, and they didn't. So we'll see how strong this remains. Let's go ahead and look at some stocks that we have inside of the ultra aggressive portfolio. We have Tech, the XLK, and you can see so strong coming off of this low area, $132 all the way up to about 200-ish, and then pulling back, but finding support on the 10-day moving average, a much faster moving average than the green 20-day. We'll see if that holds. It held here, kind of came down and turned back up, came down and turned back up. We'll see if there's another wave higher for this one. But we have a position in that inside our ultra aggressive. We did take a little bit more profits on MRVL. Unfortunately, a little bit lower than where price closed out, but it kind of feels like this thing wants to maybe consolidate. We'll see what happens. We still have some, but we kind of lowered our position there. We also did the same on Micron. It's been an amazing run. As that thing dipped down, we went ahead and took a little bit more profit, but we still have a little position in it. DocIn, where we took a position on that a handful of days ago, is continuing higher, closing at its high, so that's been a nice move. Twilio, the same thing. We have a position into this. Took that position right around this spot, and then it had a 19% day. Consolidated for a couple of days, and now busting out to new highs. So a good trade on that one so far. Wolf, open low moved lower and then finished very, very strong. We'll see if that one wants to continue its rise higher. Powell, POWL, same type of scenario where it opened lower and then powered higher. We haven't got as much movement out of this one as like we did the others, but still, this thing could move higher. We'll keep an eye on it. We took a position in IGV today, which is the software ETF. We'll see if it holds. It, if you look at this thing, there was a massive sell-off on, AI-related news, thinking it was going to take out a lot of software companies because you could just create your own software. So we endured that sell-off. We started to see some strength and then some real power moving up. 3-day pullback, found some support at the 200-day moving average. That's a little bit of how we are positioning ourselves. With the position today, we'll see if it goes higher. If it doesn't and it cracks below the 200, that'll be a spot that we consider getting back out of it on. And same thing for Palantir. You can see Palantir's amazing move up from May of 2024 from about $25 to about $200 late last year, and now it's pulled back and kind of consolidated, tried to move back up. It did reject the 200, so that's not a good sign, but came down, found some support on the 50-day, came up, and then came back down. So we might not be holding on to this very long if it doesn't right itself forward and just kind of move back up. But worth taking a shot at in the ultra aggressive portfolio. That's what I have for you today. Take care. Have a wonderful afternoon. We'll be back at it tomorrow.